You probably started your own business because you really wanted to enter the magical world of bookkeeping. Okay, so bookkeeping may not be super thrilling or something that comes naturally to all the non-accountants out there, but it is necessary for running your business successfully. That's why we're here, to make bookkeeping easy. Well, easier. In part 1 of our bookkeeping series, we'll walk you through the basics of what bookkeeping is, why it's important, and how to determine the right bookkeeping method and accounting method for your business. Let's get into it. To start, let's define what bookkeeping is. Bookkeeping is a process of tracking your business's financial transactions, including income and expenses, on a regular basis. It shows you where and when money is going into and out of your business. So, why bother with bookkeeping? There are 3 key ways bookkeeping can help you. 1, it gets you organized for tax time. If you're recording every transaction your business makes as you go, it's easier to get all your ducks in a row for tax season and track expenses that can help you lower the amount of tax you have to pay. 2, it lets you know how your business is doing and shows you how cash flows in and out. By staying on the pulse of your cash flow, you can easily see if you're spending a bit too much lately and budget appropriately. It helps to show credibility with investors and lenders. Bookkeeping helps you generate key financial documents that investors and lenders often want to see before they give you funding. Now that we've covered what bookkeeping is and why it matters, let's go over some upfront decisions you need to make. First, you need to determine the right bookkeeping method. For this, there are 2 options: the single entry method or the double entry method. If these terms are new to you, no worries. We'll explain both methods and help you make an informed decision. Single entry bookkeeping is the simplest method, and it's often used for businesses with very few or no employees, minimal plans for growth, and no need for detailed financial reporting. All your business's transactions, including income and expenses, are recorded as a single entry in a log. This leaves you with the balance, which is the amount of funds your business has on hand. For example, let's say you own a hat-making business and you pay for new materials for $1,000 cash. This would be noted as an expense in the cash logbook. The double entry method is a bit more complex, and it's often used by businesses that want to grow and or need more nuanced reporting. Unlike the single entry method, this option helps you generate important financial reports and makes it easier to accurately track your business's health. Instead of one log, each transaction is recorded twice, once on the debit side and once on the credit side. This helps you track where your money's coming from and where it's going. These entries show your account balance as well as the total debits and credits. In this case, let's say you own a bigger, more complex hat-making business, a propeller hat business, and you just purchased new propellers for $15,000. You would put $15,000 under debit for inventory and $15,000 under credit for accounts payable. So $15,000 went out of your business, but you gained $15,000 in inventory. Once you determine the right bookkeeping method, you need to determine a corresponding accounting method to record transactions. Once again, there are 2 options: the cash-based method or the accrual-based method. If you're feeling your eyes start to glaze over, now's a great time to pause this video and get yourself a snack. Oh, are you back? Great, we missed you. Now, the difference between the cash-based method and the accrual-based method lies in when you record your transactions. The cash-based accounting method is the simplest method and makes it easier to track your cash flow in real time. In cash-based accounting, you record transaction when the money actually enters or leaves your business, even if they were earned or billed earlier. For example, you'd only record revenue from a project once your client actually pays you, even if you sent them an invoice months ago. This method can work just fine if your business is simple with no real plans to grow, but if you're looking to expand, you'll need a better system pretty quickly. Which brings us to the accrual-based accounting method. This method works better with double entry bookkeeping, so it's best for more complex business structures or for businesses that need to create detailed financial reports. In accrual-based accounting, you record transactions as soon as you're invoiced or billed, regardless of whether the funds have actually entered or left your business yet. For example, you would record revenue from a project you've completed and sent an invoice for, even if your client hasn't paid you yet. If your business keeps inventory and sells goods, you'll usually be required to use the accrual method. Now, this is because cash-based accounting doesn't allow you to track inventory or any money that customers owe you on an account. This method gives you a more accurate view of your business finances, especially long term, and it's usually the preferred method. That wraps up part 1 of our bookkeeping series. Here's a recap of what we covered. Bookkeeping helps you stay organized for tax season, manage cash flow, make informed money decisions, and get easier access to funding. Businesses with a few or no employees can use single-entry bookkeeping plus cash-based accounting. If you're looking for a more robust view of your business finances, we suggest double-entry bookkeeping plus accrual-based accounting. Of course, every business is unique, so before you get started, it is always best to speak with an accounting professional who can help you decide what's best for your business. If you need help finding a bookkeeping professional you can rely on, Wave's in-house coaches are an easy solution. They can answer any questions you have about your bookkeeping strategy and provide you with personalized one-on-one bookkeeping help. Want to learn more? Check out part 2 of our bookkeeping series on how to set yourself up for success so you can bookkeep with the best of them.